Okay, well, good morning, everyone. Welcome to the Foreign Correspondents Club of Japan here in Tokyo. I'm Anthony Rowley. I'm a former president of the club, and I shall be acting as moderator for today's event, which is on the money evolution, digital money evolution or revolution. I think the way things have been, the speed at which things have been moving recently, it's fair to call it a revolution, I think. Okay, well, this morning's event is the latest in a series we launched recently on what we call deep dive events, or panel discussions in which we offer in-depth insights from leading experts on key economic, business, and social issues. So let me introduce today's panelists in alphabetical order, which is the order in which they will also speak. So, and forgive me, panelists, if the introductions are very brief, but we want to give as much time as possible to the presentations and also to the Q&A session afterwards. And to those who are with us online this morning, if you have questions, please fill in the Q&A form which you were sent with the invitation. Okay, so first we have Naoyoki Iwashita, who is a professor of monetary economics and FinTech in the graduate program for public policy studies at Kyoto University. And he's also advisor for the crypto asset task force in the Financial Services Agency. Then we have Sayuri Shirai, who is professor of economics in the Faculty of Policy Management at Keio University and a former member of the Bank of Japan's Policy Board. And thirdly, we have Hiromi Yamaoka, former Director General of the Bank of Japan's Payment and Settlement Systems Department. And he's an internationally acknowledged authority on central bank digital currencies, or CBDCs. Well, thank you all very much to the panelists for giving us your time and making the effort to be with us. The subject we're going to be looking at is a very broad one. And in some ways, it's quite difficult to know where to begin. So we've asked each panelist to examine the subject from their own expert point of view in their presentations. And I think this will help identify the wide landscape, as it were, of digital money. And then in a further session, which is going to be held on March 24th, we'll zero in specifically on developments in Japan. So first, Professor Iwashita, if you would like to give a presentation. Thank you.
Yes, thank you very much. My name is Naoyoki Iwashita. I teach FinTech at Kyoto University. And in my class, I teach FinTech to graduate students from various viewpoints, such as economics, legal, and information technology. Today, I would like to explain my thought on crypto assets and CBDC from the technological point of view. Bitcoin price is skyrocketing. People are astonished that Bitcoin easily surpassed its 2017 high of $20,000 per each BTC. It marked 57,000 US dollar last month. This price is 13 times higher than the price of 1 year ago, March 2020. And Facebook published a white paper on Libra in June 2019, which attracted worldwide attention. Mark Zuckerberg was called to the congressional hearing, and in the October 2019, many of the American lawmakers pointed out that the risk of Libra being misused for money laundering and terrorist financing. Zuckerberg responded with the China threat theory, saying that if he didn't do that, China would. And actually, China really did it. In October 2019, the same month, China's Digital Yuan project was explained at a financial conference in Shanghai. The pilot began last year. It is called the world's first CBDC. Cambodia has also started CBDC in 2020, which was developed by the Japanese venture company. Central banks in the UK, US, and Japan and the European countries also explain that they are researching CBDC and doing pilot projects in near future. The change from the fiat currency to virtual currency or crypto assets and shift from legal tender confined to one country to an internationally available digital currency. People's understanding of money is changing dramatically. Yet, when you think about it, these changes seems to be somewhat of an exaggerated sales talk. People are still receiving their paychecks in traditional bank deposit. Bitcoin, touted as the money of the future, is still not being used in stores. A digital currency that can be used for international payment has not yet been issued in reality. I do not say that these are merely all falsehood. I agree that there are significant technological innovation in the world of crypto assets. However, it is too short-sighted and hasty to think that such new technology will immediately replace the current financial business. Let me explain some technological background of the blockchain. Blockchain is the underlying technology of crypto assets such as Bitcoin. In 2008, a mysterious person claiming to be Satoshi Nakamoto published a paper titled Bitcoin, a peer-to-peer electronic cash system. Satoshi began an experiment in 2009 by developing a computer system by himself. Bitcoin was an experimental project that aimed to enable anonymous money transfers between individuals. Rather than start a company, Satoshi invited volunteers to participate in the experiment over the internet, and the Bitcoin community naturally expanded. Bitcoin is a decentralized system by using a peer-to-peer network. This network and financial institutions, traditional financial institutions is using a server-based network. This is a traditional structure of the computer networks. The financial institutions stores electronic data of outstanding balance of bank deposits and securities in the dedicated central server and strictly protected. The banking system and the Central Securities Depository, or CSD, plays a role in this process. However, Bitcoin is built about 10,000 computers connected to the internet. This site shows the distribution of the these 10,000 servers in the world. the sharing of the same data, almost the same data, to the in 10,000 machines achieve almost the same stability as a strictly protected central server system of financial institutions. Since Bitcoin is decentralized, there's no need for an expensive central server. And this was the revolutionary idea. If this technology replaces the existing financial system, it will change the financial and capital market dramatically. Nevertheless, a system without a central server would find it challenging to prevent double transfers of assets effectively. You can set the central server put in place to check the double transfers, but it violates the Bitcoin philosophy of decentralization. It also be costly to maintain that central server security. Consequently, the cost to create a new peer-to-peer network, peer-to-peer financial network, would not be much different from the current server-based financial system. But Bitcoin has uniquely solved this problem. They have decided to allow any users who joins the network to participate in the verification process of their transactions. However, in that case, the user who has made the double transfer might become the verifier himself, approving his own unauthorized transactions. As a countermeasure to that risk, Bitcoin is using a method called competitive mining. Anyone seeking to verify a transaction must solve a computationally intensive task about once every 10 minutes. The first one to answer the question would be the verifier. The mining companies in all over the world have set up mining factories to compute that task. They compete with each other. Satoshi thought that such a participant could be trusted as a verifier if he could carry such a load, such heavy load of large scale computation. This concept is called the proof of work. The winner of the computational competition generates a new block chained to the block created the previous verifier. At the same time, he gets a certain amount of new Bitcoin. Bitcoin has been operating for more than a decade with no support from anywhere, although it has no corporate structure and unknown central figure. If you look at the inside of these technology, Bitcoin and blockchain, you'll see that blockchain technology employed by the Bitcoin is not a magic wand that can be used for any purpose. The Bitcoin blockchain is often called the permissionless blockchain. For anybody who wants to take the part in the Bitcoin blockchain network, no permission is needed. Everybody can be a verifier if he wins the competition, mining. There has been proposal for the permissioned blockchain. there is someone in the center of the permissioned blockchain, and he or she limits the participant and places a sole verifier in the network. They do not involve the competitive mining in the permissioned blockchain, although they use chaining blocks like Bitcoin. There is so much different than the system with the existing central server system, because that the server-based system and the permissioned blockchain is quite similar, and permissionless decentralized blockchain is totally different. Because of the lack of the central system, Bitcoin has been able to overcome the differences in the regulatory and political systems worldwide. People in United States, Japan, and China, and Russia, and Middle East, and African, and South American countries, they all believe in Bitcoin. So the difference of the political system and the economic system, but the Bitcoin is a worldwide, something like the world currency. But the Bitcoin's price was so fluctuate, and you cannot use it as a current currency. And so, unlike Bitcoin, there's a currency such as ruble, and also these most CBDCs are said to employ permissioned blockchain. The blockchain is almost same, but they are totally different. It may not be trusted across borders. If any country holds the central system, the country's government might freeze a particular user's assets for political reason. Say, do you want to use the Chinese government controlled digital yuan as the daily payment, or to save your money to the not to the traditional banks in your home country, but to reserve it to the to make a deposit to the Chinese central government. Maybe the same goes in the Chinese people. So from the regulator's point of view, Bitcoin is too privacy conscious to be allowed to go unchecked from HTML CFT perspective. Then how about
3 minutes, please?
Okay. Only a little. How about the CBDC? It depends on how each central bank designed the CBDC. However, as long as the central bank designs CBDCs, no matter how much blockchain technology they incorporate, they cannot let it go unchecked to be used for the illegal transaction. It is not easy to create something between Bitcoin and legal tender. In conclusion, I'd like to say that Bitcoin and other crypto assets will not be used as a global payment tool. There are those who describe Bitcoin as a convenient digital cash for the anonymously transferring money anywhere in the world by the internet. However, in reality, except for some special transaction, Bitcoin or other crypto assets are not used as a means of payment, and it is unlikely to become a widely used in the future. Therefore, and also, I don't think that there is a need to compete the developing the CBDC for and the existing information system for the international financial transactions are as robust as they come, and they are cooperative to the cracking down of the illicit transactions. Again, blockchain is not a magic wand. So maybe that I believe that the innovation in the settlement field should be led by the private sector. And thank you very much for your attention.
Thank you very much for some very interesting points. Shirai-sensei, let's move to you next, please.
Yes, Okay. Yes, so I'd like to talk about crypto asset and CBDC. So it's divided into two parts. So first on crypto asset, why we pay so much attention nowadays, and as you see on this chart, please look at the top chart, and you can see this is the Bitcoin price and in terms of US dollars, and there's a sharp increase. And then nowadays, everybody knows the stock prices are becoming so high. In the case of the United States, led by NASDAQ, they faced record high prices this year. But what is surprising is that compared to the US stock prices, the Bitcoin prices went even higher. Now, when we look at the various cryptocurrencies, Bitcoin dominates. So at this moment, out of this global shares, the Bitcoin account for about 80%. Now, where this Bitcoin is transacted, please look at the right-hand side. So most of these Bitcoin, crypto asset transactions are made in Europe and South Korea and Hong Kong. And I think Hong Kong, this is related to the stable coin, USDT, which I will explain in a minute. So the question is whether crypto asset such as Bitcoin can be money, and how is the currency status compares to fiat money like US dollars, Japanese yen, and euro. So as a medium of exchange and unit of account, it's clear that crypto assets are not accepted widely as a medium of exchange and a unit of account. And it is true that some companies such as Dell and Microsoft, they started to use Bitcoin as a payment method. But recently, the New York Fed report suggested even though they accept Bitcoin and for their transaction, but actually they never receive, those retailers never receive Bitcoin using third parties. It means that when those shops get Bitcoin from customers, they immediately send it to the third party, and then third party immediately make exchanges and convert into US dollars and send back to the retailers. So actually there's a third party. So now this kind of process may not be efficient because the retail shops have to pay fee to the third party, and there's a third party counterparty risk. In case this third party go bankrupt, there's a risk involved there. And also this kind of transactions related to the particular regional crypto asset exchanges, so that creates friction. So this is why we see different Bitcoin prices across exchanges. So low of one price.
I'm sorry to interrupt you, but could you possibly move a little closer to the microphone? Do you think it's
okay, louder. Okay. Okay, so it's clear that crypto asset is not used widely as a medium of exchange, but at the same time, recently, there are lots of investors are paying a lot of attention to the, especially Bitcoin. The demand has risen amid the declining US dollar index. That started happening from middle of last year. The US dollar started to go get weaker. And I think investors started to pay attention to Bitcoin as a hedge asset. In the face of declining fiat money values, some investors find it probably a good opportunity to invest in a Bitcoin as a hedge asset. And also Bitcoin can function like a gold. Everybody knows gold is a hedge asset. And so Bitcoin can be another alternative asset to be a hedge asset. And it is true that when we look at the Bitcoin, not only for payment, but there is a Bitcoin futures, some financial institution created funds denominated in Bitcoin and other crypto assets, and we can now borrow and lend these Bitcoin. However, crypto assets seem to be a poor hedge for stocks, and diversification benefits are unclear due to the overvalue prices, both crypto asset and stock prices. So now I just talked about crypto asset. There are two major different types among crypto asset. One is a Bitcoin, and another one is stable coin. Now, Bitcoin, everybody knows, is extremely volatile, and then but there is a supply limit on the amount of Bitcoin, but there is no stabilization mechanism. On the other hand, stable coin like a USDT Tether, which is very popular in Hong Kong, they are very stable because there is a central entity, issuers, and who issue stable coin in exchange of US dollar. And so they keep US dollar as a collateral. And this kind of mechanism creates more stable and safer crypto asset. But we have to make sure those central entity keeps the US dollar reserves credible. But both are based on the DLT, so they are subject to the cyber risk, market manipulation, very limited protection, and so on. So I just said that in the case of Hong Kong's USDT Tether, so compared to the Bitcoin, it's far more stable. But having said that, it's not really complete stability is achieved. Now, over this various crypto assets, there's a growing regulation. For example, in the United States, Europe, and Philippines, and I think also Japan. Now, central bank and regulator tries to check this transaction crypto asset by asking exchange operators to identify the users, and also try to check counterparties when they make transfers. And why they are doing it? Because I think they fear of losing control over money, and there's a concern of supporting illegal activities. Now let's briefly talk about this Facebook Libra, and now it's called DM plan. This is a very quite different from any other crypto asset, because there's a potentially large users. As you know, Facebook has 1.7 users, and this Libra plan is supported by 26 technology companies such as Uber. So if this is used by globally, it can immediately lead to the very large population. So this Libra is going to be sort of a stable coin. And so they issue Libra dollars against the US dollars, like Libra Euro, Libra Pound, Libra Singapore dollar. So it's basically, it's a stable coin. And also they will create a basket of stable coin comprised of those, Libra dollar, Libra Euro, and so on. Why many central bank and regulators so scared of this Libra plan? Because, for example, if I'm a user in an emerging economy, and I use Facebook, and I will start to use Libra dollars, and then I get the Libra US dollar by paying US dollar to the issuers. So it means that the people globally, the user, they will start to use Libra dollars or Libra euro, and these central issuers will keep all those fiat money like US dollar and euro, right? So it's potentially the Libra can replace existing fiat currency, and these central issuers can function just like a MMA. So therefore, Libra issues should be treated differently from any other crypto asset. So now let's go to CBDC. So I think here what we should compare is between stablecoin DM and CBDC, because it's both relatively stable. What are the differences? In terms of stablecoin DM, it's issued by private companies, whereas CBDC is issued by central bank. In the case of the DM, there is a risk of manipulation failure, because since it is operated by private companies, there's always risk there. Now, when the central bank issues CBDC, a central bank is not supposed to fail, and therefore they are able to provide safer payments too. Now, in the case of DM stablecoins, the issuers do not need to care about the universal access. That's not their obligation. Whereas when the central bank issue this crypto asset, they have to ensure that everybody has access to this kind of currency. So therefore, the requirement expected on the issuers will be much greater for the case of central banks compared to the private individual issuers. Now, please look at the left-hand side. This is from a BIS survey. You can see this is a survey conducted to the central bank and asked whether they started to launch out some engagement in CBDC work. And you can see there's a big jump in 2019, and 2020 even more, a growing number of central banks pay more attention to the CBDC and started to do some kind of work. So what explains this sharp jump in 2019 and 2020? And it's very clear in 2019 that Facebook announced Libra Plan, and that kind of giving a potential threat to the central bank. And then for the 2020, because of this COVID-19, people do not want to use cash, and everybody want to use touchless payment. And for this reason, central bank have to think about issuing digital cash, rather than the cash. So this kind of two factors contributed to the growing interest in the central bank circle. Now, when we talk about CBDC, there are two types. One is the general public. It's called retail CBDC. It's issued to the general people like us. And another one is a CBDC can be issued to the wholesale market. It's a financial institution. Now, basically, I think they're going to use some kind of DLT blockchain or blockchain-like technology. So it's basically token-based. But in addition to the DLT, in the case of retail CBDC, some central bank try to issue CBDC without using DLT. So it can be account-based. For example, central bank can allow general public to have a deposit directly with central bank, or central bank can issue CBDC without using a DLT. Now, a lot of central banks globally pay a lot of attention to the retail CBDC. There are two ways to do it. One is that central bank directly issues CBDC to individual people. That is conducted by Bahamas. And another way is the central bank does not issue CBDC directly to the general public, and instead try to go through the existing commercial bank. So it's called two-tier system. That system is used in the case of China and Cambodia. Now, on this retail CBDC.
So, say 3 minutes, please. 3 minutes.
Okay. So one we can use with internet or without internet. So I think there's a feature on related to CBDC. So what motivates this CBDC? The motivations are different between emerging economy and the developed country. Emerging economies, they pay attention to the financial inclusion, saving cash handling costs, improving payment efficiency, reducing dollarization, internationalization of local currency. But in the case of developed countries, they pay a lot of attention to the potential threat coming from Libra. And then in the case of Sweden, the cash is no longer used much. So they have to find alternative digital cash. So, and other central banks, they want to catch up with new technology. Okay, so, but I just want to say, according to this BIS survey, I think we are not going to see CBDC anytime soon. But 6 years from now, we might see some CBDC retail based in some country in the world. Okay, so let me conclude. So the number of crypto assets is increasing with diverse features. However, Bitcoin remains a dominant crypto asset. The wild crypto assets are not widely used as a medium of exchange and a unit of account. Stable coins may become threats to the central bank due to replacement risk. The central bank interest in the retail CBDC has risen due to regular DM plan and the COVID-19 pandemics. The general public may see a growing number of CBDC over the next 5 to 6 years. The most influential CBDC are likely to be digital yuan. However, the capital control and slow progress in internationalization of yuan may hamper the rapid cross-border penetration. Thank you.
Thank you very much, Yamaoka-san.
Oh, thank you very much. I'd like to share my slide, and this time, could you
Yeah.
see sharing? Yes, thank you very much. So, I'd like to share the slide. Yes. Thank you very much. Yes. Oh, the last slide. Sorry. Okay, so today, I'd like to briefly explain how the digital technology challenges the modern monetary system, because the modern monetary system has a history of less than 200 years, and the modern monetary system has two major characteristics. One is the nation-backed, and the modern monetary system was established in the 19th century, where most of the central banks were established in modern nation state. Indeed, the modern central bank were established as a later stage of modern nation state, because money needs a trust, and the modern nation state established the institutional framework to establish the trust. That's why the central banks and sovereign currencies were backed up by the nation states. And the second characteristics is the two-tier system, consisting of central bank and commercial banks. Those two-tier system and nation-backed system were two major characteristics of the modern monetary system. And indeed, digital technology is now challenging these basic characteristics of the modern nation states. I'd like to explain a little bit about this phenomena. Indeed, most of the central banks were established in the 19th century, almost simultaneously. It's very, very interesting. For example, in Bank of England were established in the 17th century, and the Swedish Riksbank also in the 17th century. But they became the single issuer of the sovereign currency also in the 19th century. And Bank of Japan was established in 1882, and the Germany Reichsbank was established in 1876, almost simultaneously in the human being's history. This is very interesting event. And of course, this modern monetary system has a bunch of advantages. It has a single unit of currency. So no need to exchange the different multiple number of the currency units. It is a great advantage. And at the same time, central bank occupy the power of the issuance of the sovereign currency. At the same time, they can use the commercial bank's power to provide the money to the economy. They can use the private sector initiatives to achieve the efficient fund allocation to the economy. And they can use the incentives of the private sector to innovate the payment system. So that's why in the 20th century, most of the country, most of the nations share this kind of similar kind of framework for providing the money, modern monetary framework. And but there's a couple of challenges recently. There's the three major challenges. The first one is the crypto asset. In 2009, Bitcoin, first generation crypto asset was established. Of course, they try to create a trust outside or beyond the nation state. So this is also a big challenge to the modern monetary system. But at the same time, as Shirai-san mentioned, the value is very, very volatile. And there's a bunch of issues in order to obtain the some sort of synergy for issuing the digital asset. So it may not become the payment instrument. It cannot work or it cannot function as a money. It it remains basically as a speculative investment target. And a second challenge is the big tech, entry of the big tech. In these 2 years, many IT giants, which is called big tech, are entering into the payment services like Alipay or Tencent WeChat Pay or Google Pay, Amazon Pay, all the IT companies, giant IT companies, which is called big techs, are entering into the monetary services, payment services. And indeed, these companies have great advantages. For example, compared to the global big banks, their funding cost is lower than those big banks, which is a great advantage in dealing with financial businesses. And the rating is higher than those global big banks. And indeed, FSB is paying great attention to those issues, the new challenge to the banking system. So we formed a couple of working groups on that. And I was chairing those working groups as a work stream lead and issued several papers. And the third great challenge is, as Shirai-san mentioned, Libra. A Libra is called a stable coin. It is backed up by fully by the safe asset and try to become the global payment instrument. And this is 2 big characteristics in Libra. The first, Facebook has active users of over 2 billion. Of course, network externality is critically important for payment networks. And Facebook already has big networks. So that's why the Libra could become a payment instrument. And the second characteristic, of course, stable coin, characteristic of a stable coin. So it is backed up by the sovereign asset or safe asset. That's why the value would be stable. And the stability of the value is a critical, critical characteristic for the payment instrument. That's why global financial community has a great interest in Libra. Of course, they are very cautious against Libra. First of all, they call that 50% of the backup asset will be dollar denominated, but 50% is too low from the viewpoint of the US congressman. And Libra also mentions that they do not include Chinese renminbi, Chinese yuan. So it is unacceptable for the Chinese authorities. So global financial communities are so hostile against Libra. So they changed the name to DM, and they have not yet issued Libra officially. So the CBDC could be understood as the authorities' effort to utilize or apply digital technology to their own currencies and to defend the modern monetary system, nation-backed system. And for example, as Shirai-san mentioned, the growing attention from the central banking world toward central bank digital currencies. And there's lots of speech recently about the CBDC. And there are 2 types of CBDC. First one is a retail-based general purpose CBDC. And the second type is a large value CBDC, mainly used for large value transaction by banks, as Shirai-san mentioned. And when I was working as a director general of the payment department of the Bank of Japan, we started Project Stella with the European Central Bank about the large value CBDC. And of course, as Shirai-san also mentioned, there's a couple of initiatives taken by foreign central banks, including Sweden, the Bahamas, Uruguay, Cambodia, and China. And the most prominent effort is Chinese renminbi, ECNY. China already started experimental issuance in 4 big cities in China in April 2020. And China tried to give only the controlled anonymity to ECNY. That is the general characteristics of the very big characteristic of the ECNY. And the question is why ECNY? Because China is already a digital country in terms of payment. So why they have to issue the Chinese renminbi on a digital basis? There's a couple of initiatives for China. The first one is try to control the activity of the big tech in China, like BAT, Baidu, Alibaba, and Tencent. Because also for the Chinese authorities, if those companies have become too big, and become uncontrollable. It is problematic. So the first motivation is to control the activity of the big tech. And the second purpose is to grasp the information or data attached to the daily transaction of the Chinese people. And the third one is try to internationalize Chinese renminbi or raise the presence of the Chinese renminbi in a global world. And the recently Hong Kong Monetary Authority started the experiment on the cross-border use of the Chinese renminbi. And at the same time, the Bahama became the first country to officially issue the digital currency, Sanda. And then I'd like to talk a little bit about the implication on of the CBDC on the monetary policy. There's a bunch of issues, and this is the representative issues in terms of CBDC. The first, they may have impact on bank deposit. If people compare the credit risk and interest rate, they might prefer central bank digital currencies rather than bank deposit, because bank deposit includes the credit risk of the commercial banks, but CBDC is a risk-free. So especially in the country of low interest rate, the people might prefer CBDC. And if people move the fund from deposit to the CBDC, it means that the source of bank loans will decline. And the volume of financial intermediation made by banks would also decline. This is a big issue. And this kind of move of fund is likely to occur in the situation of crisis. If people, prefer the central bank deposit due to the flight to quality, they might accelerate the liquidity crisis in a problematic situation. And the third big issue is the zero lower bound. Some scholars or some academia argue that the central bank digital currency would be the operational instrument to achieve lower negative interest rate, just cutting the nominal value of the central bank digital currency. But if they cut the nominal value of the central bank digital currency, people might prefer banknote rather than CBDC. So that's why the central bank should issue the CBDC. This is a fundamental problem. And the fourth issue is that should the CBDC, attach the interest rate on the CBDC or not? If some academia argues that if CBDC have the interest rate, positive interest rate, it may work as a strong lower floor on the market interest rate, wider interest rate. But at the same time, if central bank offer the interest rate or provide the interest rate on CBDC, it might accelerate the move of fund shift from the deposit to the CBDC. So this is also problematic. And should the central bank limit the amount on the CBDC per each person or each individual or each firm? This is also a very difficult issue. Of course, if central bank try to prohibit or the large scale fund shift from the deposit to CBDC, the controlling the volume would be one of the options. But if central bank limits the volume on the CBDC, it means that there's a scarcity in the CBDC. So one by one exchange may not be guaranteed due to that policy. And CBDC will have another big issue: how the CBDC will affect the efficient resource allocation made by the private sector. If bank loan decline due to the CBDC, how those loans should be provided to the economy? Central bank is not in the good position to make a judgment on the risk and return of each project. So CBDC might distort the resource allocation made by the private initiatives. This is also a big issue. And how the CBDC would impact on innovation. The innovation in the payment system are created mainly by the private initiatives like a credit card, debit card, or ATMs. But if central bank occupy the central bank CBDC and the payment infrastructures, how it will affect the incentives to innovate the payment systems. And third, if central bank occupy all the data and accumulate all the data attached to the transaction by the people, how the CBDC would affect the use of data by the private sector. This is also a very big issue. And finally, I'd like to talk a little bit about our own initiatives. We formed a digital currency program made by the Japanese leading companies. We try to promote the private-based digital currency in the Japanese industry. Of course, we need to reform the way of businesses, way of doing businesses in Japanese industrial society. This is a big challenge, but we try to do our best to promote the digital currency as well as the digital-based business practices in the Japanese financial world and business world. Thank you very much.
Thank you very much indeed. Certainly raised some complex questions. All right. Before we turn to questions, I'd like to ask one brief question myself, which is a question that I asked when we were discussing climate change recently in one of these. There are so many different players and authorities involved in coordinating climate change. So the question I want to ask is very simple to all of the panelists. Who's in charge? I mean, there are so many international implications of this move towards digital money. Which, if any, central authority is likely to be able to coordinate the shifts towards various forms of digital money? You know, first.
Of course, first of all, the central banks and a nation in general, because modern monetary system is backed up by the central bank and formed under the condition that the nation state is the best situated entity to create the trust. So if we need something to introduce some new technology to innovate the payment systems, of course, the central bank and the nation state as a whole should take initiatives to promote these kind of initiatives. This is my answer.
Okay, so Shirai-san.
Yeah, so in terms of this money, I think it have to be controlled and issued by central bank. But in the meanwhile, there is lots of various different kinds of crypto assets, and that's very difficult to regulate. As I mentioned, so US or Japan or Europe, they check identification, but not all crypto assets are transacted through exchanges, so it's very difficult to control. So when these lots of crypto assets are emerging, and everybody starts to pay more attention, especially in emerging economy, how to control them is a very difficult issue.
Yamashita Sensei, do you have any comments on that? Oh, sorry.
Yes, can you hear me? Yes, thank you very much for unmute me. And yes, and my opinion is my opinion is a little bit different from the other panelists, and I believe that the of course that's government and also the traditional banking sector would be a very important role in this field. But you know that the reason why the Bitcoin soared in these a few months, the Tesla Motors. Elon Musk decided to buy the Bitcoin. The Elon Musk is a member of the PayPal mafia of the Silicon Valley. And in 1998, the PayPal was created at the time. Peter Thiel and Elon Musk together in the PayPal company, and they said that we are going to democratize the payment. The payment is occupied by the Wall Street traditional banks, so we need to democratize them to the public or something like that. Such kind of the statement was made by the PayPal people, and now they have this very strong power in the Silicon Valley, and also the whole, and they become creates a big tech. So, and maybe that there is some kind of retreat from the outside of the traditional banking, traditional financial institutions to the as they can do non-banks people can do they can do much better than the traditional banks, and maybe that the traditional banks and also the banknote issuers, the traditional central bank or traditional government is in the threat of such kind of attack, and if we don't do that, maybe that the big tech people will do. And if there is a competition between these two entities, there would be a good progress for the ordinary people and the whole economy. So maybe that we don't limit any players to be limited to the any traditional banks, traditional central bank, but we should be more open-minded to do everything, to allow them to make some kind of the pilot or maybe the challenge for such new method of the payment. Thank you.
Thank you. All right, let's take questions first from the floor. Do we have questions? Yes. Please go to the microphone and identify yourself in the usual way.
Thank you very much. My name is Yusuke Wada. I am an associate member here. And one of my questions is about the CBDCs and of the, I should call it the sovereign cryptocurrency. If a country implements these sovereign cryptocurrencies, I should say through CBDC, it would be very easy to use as trafficking narcotics and also weapons for under if the country is under sanction. And what is your opinion on that? Anyone? Thank you.
Actually, so if you mean that cryptocurrency means yes, applying the blockchain or DLT, yes, you mean that. Actually, if the central bank issued the central bank digital currency by using blockchain or DLT or other digital technologies, maybe, this is my guess, but they do not have an intention to provide full anonymity as a banknote. That's one of the reasons why they are concerned with the CBDC. And of course, the some private based crypto asset has a full anonymity. That's why it is used for the illegal purposes sometimes, like a ransomware. And one of the purposes to produce a CBDC is to prohibit those kind of activities by taking control of some information or data on the payment instrument. So I think that your question is very hits at the core of the idea, and to prohibit those kind of illegal activities stemming from the anonymity is one of the one of the hidden purposes of issuing CBDC. This is my answer.
Shirai-san, do you have any comments to make on that?
Yeah, so as I said, Japan or Europe, US, they try to regulate crypto assets because of the concern on the illegal activities. So they are doing it by requiring the local exchanges to check the identification, but that means they cannot check all exchanges in the world. So it's very difficult to control illegal activities, like this is Yellen recently said. So on that aspect, the CBDC is much safer, and probably we can limit, we cannot maybe eliminate, but we can limit some illegal activities, as Yamaoka-san said, because of they are not going to ensure full anonymity.
And Iwashita-san.
Yes, let me introduce our very funny pilot project conducted by the Marshall Islands in the Pacific Ocean, and they have been used the US dollar as the currency, but they have just released the law, and they have decided to issue the CBDC. And the name of the CBDC is sovereign. So it's very, but International Monetary Fund has intervene the martial alliance to stop wishing that, because that it might be used for the money laundering and also terrorist financing. So now they have so far they do not issue the sovereign itself. From my point of view, that maybe that the central bank is a kind of the is also the takes part of the function of the government, and we need to make the people to legal transactions. So we cannot ignore that our banknote is used for the illegal use. So, but as far as the paper banknote is used for the illegal transaction, then central bank cannot do anything for that. So it actually the paper banknote is used for the illegal transaction in all over the world. But if it is digital money, and then digital money can trace by the issuers. So if the central bank become issued, and they will stand by, they do not care about the usage of the illegal transactions, then the central bank would be criticized. That's why that maybe that the central bank cannot do the same thing as the in the digital currencies, CBDCs, the use just like as the paper banknote was used. So maybe we need to do more conscious about the legal activities of the currency users.
Okay. We do have one online question from Takashi Sendo. If I can summarize it, what he seems to be saying is that we already have many forms of cashless payments. The introduction of digital currencies seems to be threatened to confuse the issue even further. Any comments on that, on whether really all these various developments are going to result in serious confusion among the public and among businesses?
Could I?
Yes.
Yeah, okay. So yeah, this is a wonderful question. And there are two seemingly conflicting needs for the digital currency. The first line that once in that digital currency should be used widely by anyone. This is a question of the interoperability of the digital currency platforms. And the second one is to satisfy each individual business needs. For example, if digital money is used for the security transaction, by using a smart contract, the digital money should achieve a DVP, delivery versus payment, by using a smart contract. And there's two conflict needs. First one is the interoperability, widely used. And the second one is that to satisfy the individual needs, and how to, take an appropriate balance, strike a balance between those two needs. That's why our digital currency forum tried to create a two-layered digital currency. In the first layer, this is a common field, and they have a information on the value, for example, 100 yen or 1,000 yen, or like that. And on the second layer, we should input or incorporate smart contract to satisfy individual business needs. And they can be used for individual business purposes. And if it go back to the issuer bank, and we exchange those two-layer digital currency with another digital currency with vacant upper field. And we can exchange those two-layer digital currency among banks or issuer corporations or issuer companies. That's the basic concept of our digital currency forum and two-layer digital currency. And I understand that your viewpoint is very important. We need to satisfy the interoperability needs, as well as we need to satisfy each business needs. Thank you very much.
Thank you. Shirai-san.
Okay, I fully agree with what Yamaoka-san said. Maybe I'd like to talk about a different angle from a perspective of consumers. Actually, in my presentation, I skipped it because time was limited, but I wanted to mention in the case of Japan, there was a survey about the preference of a different type of digital currency. So one is the credit card. That is a digital payment tool, but it's traditional. We have it for many, many years. And the other one is a sort of a QR code, e-money, a more recent type of payment. So the question asked to the general public, which do you prefer over the sort of credit card and QR code? And then by asking various features. And then what was interesting is that people continue to prefer credit card over QR on the because the credit card provides better points, better advantage. And another advantage that people think is that digital credit card is safer because most of those issuers established very famous companies. So what I wanted to say was that new type of cashless payment is happening also in Japan, but it doesn't mean there's a rapid penetration by the new type of payment issued by big tech. And so people pay more attention to the safety and also points. That is important. So having said that, in case in the future central bank issues CBDC, it doesn't mean that people will be attracted immediately because people also pay attention to the point.
Okay. Yamashita Sensei.
Yes, and have you ever visited the point of sales of the Japanese convenience stores? You can find so many very complicated payment methods, credit card and debit card, and also the QR code and transportation, e-money, so many different. So if you are the clerk of the convenience store, you'd be very confused with such kind of various payment methods. But as far as you use your smartphone, then you can choose what the payment method you like. And I think that there is a competition between the private companies of the private payment companies, and such competition would be resulting maybe in the national profit, maybe in near future. They will be united. For example, the Suica and Passmo, such kind of the transportation IC card was only used for the was originally used for only for the JR, the Suica and also the Tokyo Metro for the Passmo. But they are now they can use both. Such kind of the improvement will be made. And I think that when I visited European countries in the early 1990s, I was so confused using the different European currencies because they have a different exchange rate. But so far, these payment methods are all Japanese yen based. So the confusion is not so severe, I think. Thank you.
Okay. Okay. Yes.
My name is Kutsiba. I'm an associate member, and there is some follow-up to what Wada-san was talking about. Quite a number of years ago, when the blockchain and the Bitcoin became kind of up on the surface, we had a big discussion at Temple University at that time. Mm-hmm. And my conclusion was from the beginning there, and nothing has changed my opinion, was that, yes, it's money laundering, it's fraud, it is going around sanctions, it's drug dealing, it's all kind of activities where you don't want the government to be able to follow or to control what is going on. But this is not really my question. The question is, we were talking about MMS, and here we are coming into a different area, which is MMT. And I was wondering whether the press club would come up with using MMT once as a subject of discussion for the next meeting. Thank you.
The answer is yes, we're happy to do that. I would like, we're coming towards the end, so I'd like to pose one quick question to all the panelists, which is, can you look into the digital money future, say 5 years, 10 years ahead from now, and predict what it will look like? Will most countries be using digital sovereign coins? And if so, what role will the cryptocurrencies such as Bitcoin be playing? So in other words, just give us a brief insight into what you think the digital money landscape will look like 5 years or 10 years from now. Does it, please?
Yeah, okay. About your question, the MMT. MMT is sometimes called no monetary, no modern, more safely. And this not so many papers paper on American Economic Review as they discussing on the internet on an anonymity basis. And actually, I think that the problem with the MMT is a lack of micro foundation. Of course, we fully, as economists, we fully understand some sort of the double entry bookkeeping, of course. And yeah, every economist knows the double entry bookkeeping, meaning of the double entry bookkeeping in the 19th century. And since then, the economics academia tried to establish a new theory like equilibrium or partial equilibrium, general equilibrium, and prices. Because, for example, when I was working in the International Monetary Fund, we saw a bunch of countries facing difficulty like inflation, fund outflow from the country where the fiscal discipline is deteriorated. And of course, they are not default in an exact sense, but they face difficulty due to the inflation or outflow of the fund. Why? This is a fundamental question of the economics. And for 100 years, we economists talked about resolve this kind of issues. And in my feeling, MMT sometimes lacks or oversee this kind of new development of economics and try to go back to 100 years ago. This is my impression at this moment.
Right. Sorry, do you want to project forward, as I said, into the future and say what the digital money landscape will look like in 5 to 10 years' time from now? Will most countries be using central bank digital currencies, and what will be the role of cryptocurrencies, the Bitcoin, etc.?
Yeah, I think that 10 years ago, of course, some countries, especially small country or developing country, tend to use a central bank digital currency where the commercial banking system is not developed. Because introducing digital technology to the central bank money is the fastest way to achieve the developed technology. But where in the countries where the commercial banking system are well developed already, it would be a bit difficult to introduce CBDC. Instead, private sector would play a leading role in applying digital technology to their own payment instrument. This is my view.
Shirai.
Yeah, so 10 years from now, I think we will see a growing number of various crypto assets, and probably a growing number of investors starts to consider those crypto assets more than just speculative assets, because there are various futures, and various financial services already started. So we will see a growing number of crypto assets, and maybe people are more interested in using that. In terms of CBDC, small countries' issuance of CBDCs doesn't have a big impact. But I think China's case is very different. So because they want to internationalize yuan, but as I mentioned in my presentation, I'm not sure how far they can make a progress on this internationalization of yuan, because they still have a lot of regulation for the payment. But we still have to say, if Fed is going to issue digital dollar, that will be the biggest impact. And then probably dollar dominance will continue. But so far, Fed is not interested in. So that's why other countries can take advantage, and then they are rushing to issue CBDC.
Okay, thank you. Iwashita-sensei.
Yes, and two questions. One is MMT, and two with the future landscape of the 5 or 10 years future. And about MMT, MMT is also popular in the among my students. And I often asked from my students, what is your opinion on MMT? And I always say that, why don't you read General Epstein, What's Wrong with Modern Monetary Theory? And this book, the concept is very similar to mine, and I persuade them to read the different thought, not only the MMT theory, but also some critique from the MMT, and you need to think both, or something like that. And because of time limitation, I just answered to your question about how do we treat my students. And then for the next question is the future, 10 or 5 or 10 years landscape. And 20 years ago, I go to the university in somewhere in Tokyo, and make a presentation of the future of the money. And in 20 years, you will never use paper money, but electronic money, you will use paper money. I said 20 years ago, but the reality is we still use the paper money. So my prediction is not correct, and so please don't trust me. So even so, and in 5 or 10 years, I don't think that the paper money will wipe away from the Japanese society, because the Japanese people loves so much the banknotes. So for example, in the wedding ceremony, or maybe some other events, Japanese people will hand some amount of money. Or I don't think it cannot be changed. It will change to the QR code or the electronic money. But I think that the digitization would progress much more in the future. So maybe that in the retail landscape, maybe that will change not all, but most of the transactions would be made by the electronic money base. But at the time, I don't believe that the virtual currency or the crypto asset will be used at the stores or the ordinary transactions, and because of the fluctuation of the price will still continue in the future, because there is no anchor of the for example, Bitcoin prices. So I think that's in the 10 years, 5 or maybe 10 years future, the situation is not so different from the current situation. But I believe that progress is steadily made in year by year. But don't trust me.
Okay, thank you very much. So we shouldn't burn our paper money yet. All right, well, thank you very much. Well, I'm afraid we've come to the end of our time. We've opened the debate today. That's all we've had a chance to do. We will have another session on March 24th, which, as I say, will focus on the specifically Japanese implications of this subject. We'll have a different set of panelists, but today's panelists are very welcome to join us on that occasion, as indeed is everyone else. So let me thank you all to the panelists for very interesting and informative presentations. And well, thank you all for coming. Thank you.
Bye. Thank you very much.
Thank you.
Thank you.